And Mayankji, if you can just make Mr. Rajat Yadav as a co-host, please.
Hello.
I will not be able to do it, so you have to do it. Okay, all the presenters, I request you to keep your phones on silent. So good evening, everyone in India, and good morning to everyone in Canada. Welcome to our virtual program, the Canada-India Investment and Trade Collaboration Initiative. I am Bhavik Parikh, Director of Indo-Canada Chamber of Commerce. I look after Chamber's IT portfolio. We have an exciting program this morning that includes speeches from our leaders, followed by a presentation on investment opportunities in India, and then a panel discussion. So without much ado, let's commence our program for this evening. Please join me in welcoming Ripu Daman Singh Dhillon, the 34th president of our chamber. Ripu Daman established ICC Canada Immigration Solution and Incorporated to help new immigrants to easily settle into a better life in Canada. His entrepreneurial zeal led him to launch Guru Restaurant in 2013 in Heartland. His affinity for public service inspired him to start Radio Dhun, Ontario's first multicultural and multilingual radio station. And in 2017, he acquired Radio 1220 AM that reaches audiences Ottawa to St. Catherine. Please join me in welcoming Ripu Daman. Ripuji.
Thank you, Bhavik-ji, and good morning to everyone in Canada, and good evening to my friends in India. And welcome to all of you to the Indo-Canada Chamber of Commerce. And we are excited to be hosting this virtual program on Canada, India Investment and Trade Collaborative Initiative. I am joined today by my colleagues on the board, and it gives me an immense pleasure to acknowledge the presence of Virendra Rathiji, our corporate secretary. Arvind, I think he has already joined in, or he might be joining in. He's our VP and Director in Finance. Rakesh Joshi-ji, we are Vice President and Director, Legal and Government Affairs. Mr. Murari-Lal Thapliyal, Vice President and Director, International Relations and Global Trade. Sanjay Kulkarni-ji, we're expecting him to join soon. Director, Strategy and Startups. Chirag, thank you very much. Chirag Shah, Director, Consuls. Bhavik Parikh, he's our co-host today. Thank you very much, Bhavik, for your efforts and for your hard work. He's our Director, IT. And Shilu Sharma-ji, Director, Programs. Vipin Gupta, our new Director, as an nominated. And we are honored to have with us the Consul General of India in Toronto, Apurva Srivastava. Her contribution to the Canada-India relations is tangible and tremendous. Today's program is about investment opportunities in India. Whenever we think of investing, we imagine that the investor has access to massive amounts of funds, but that is not necessarily true. The nature of investing has transformed radically in the last few years, especially after the advent of the startup ecosystem. Today, even a humble Indo-Canadian entrepreneur like you and I can think of investing in the Indian market. One of the advantages of investing in India for Indo-Canadians is that most of us inherently know and understand the Indian market. We are aware of the opportunities and the potential pitfalls, and we know where we should take the risks and where to back off. There are many options and opportunities. The easiest of course, is the Indian stock market, which is expected to continue giving high returns. Friends, our chamber has a strong record of accomplishments of engaging with the federal and provincial governments in Canada and the union and the state governments in India. As the largest membership-based business organization of the Indo-Canadian community, our chamber is uniquely placed to both reflect the sentiments of a rapidly growing community and to advocate its interests in the Canadian mainstream. We represent the Indo-Canadian small business owner. This person is a first generation immigrant who has launched a business and who needs a network to sustain the business. Our chamber has helped such entrepreneurs sustain and flourish in an unfamiliar business environment by holding their hands and guiding them. We have consistently maintained that it is only through better economic ties will our two countries achieve better political ties. Let me conclude by acknowledging the tremendous contribution of the Consulate General of India in Toronto in promoting the bilateral ties between Canada and India and supporting the Indo-Canadian community. I thank you all for being here today, and I hope to see you in our programs as we return to the pre-pandemic order of normalcy. Thank you very much. Thank you, and over to Bhavik.
Thank you, Ripudamanji, for that insightful speech. I'm sure we will see a lot of action on the Canada-India bilateral investment and trade front in the coming months, especially as the pandemic restrictions are lifted globally. I now like to invite Consul General Apoorva Srivastava to deliver special remarks pertaining to policy framework. I now invite Apurva Srivastava, the Consul General of India to Toronto. Apurvaji is a career diplomat having joined the Indian Foreign Services in 2001. Prior to being appointed at India's Consul General in Toronto, she worked with the Minister of External Affairs from January 2017 to August 2019. In her 2-decade of diplomatic career, she has served twice in the Indian Embassy in Paris and in the Indian Embassy in Kathmandu from June 2009 to August 2012. In the headquarters, she has served as Under Secretary SARC and as a Director Administration. Please join me in welcoming Consul General Apoorva Srivastava.
Thank you, Bharat. Namaskar and good morning to all of you. Good evening from people from India. Let me welcome you all for this very special session on investment in India. I would like to thank Indo-Canada Chamber of Commerce for partnering with us for organizing this event. Invest India, especially Shri Rajat Yadav, who will be making a detailed presentation on investment opportunities. And I'm confident that this session will help the potential investors to equip themselves with necessary market access information, which will enable them to establish and expand investments and other business-related activities in India. As Mr. Dhillon already told you that this is basically for people of Indian origin who wants to invest back to India, members of ICCC and some other people. So we don't have to tell you about India. You already know about India. But I have been here for like 2.5 years, and so many a times people contact me and say that now this is the time to give back, and we want to invest in India, or we want to give back to India, and they want to they need opportunities to do that, and that's why with ICCC we thought about this, that at least tell people about the opportunities that are present in India. This giving you a brief background about the government of India and the favorable policy regime and robust environment of business to flourish. The government has taken several initiatives in recent years to increase the inflow of FDI equity in India. These includes relaxation in FDI norms across sectors such as defense, telecom, power exchanges, stock exchanges. We already have political stability, investment-friendly policies, transparency in governance, highly skilled talent pool, and a large market, all of which together make India a very favorable destination for foreign investment. In recent years, investing into India has become beneficial both for India as well as for investors. India registered the highest ever annual FDI flow of approximately $82 billion in the COVID year of 2020, 22, 21, which was boosted by reforms such as reduction in corporate tax rates, easing in liquidity problem of NBFCs and banks, reduction in compliance burden, and policy measures to boost domestic market. We have shown resilience in the face of pandemic and emerge as a land of solutions to overcome various global problems, to manufacturing, supply chains. Despite the disruptions caused by global pandemic, India's economy is poised to grow at 9.2% in the current financial year. The overall economic activity has gone beyond the pre-pandemic levels, owing to the growth driven by strong exports, global economic recovery, domestic private investment, and ramped up production activity. India's exports to both goods and services have been exceptionally strong so far in 2021, has beaten all records. We have announced production-linked services schemes for 13 key sectors of manufacturing. Indian stock market has emerged as the best performing in the world with over 45% return on investment over the past 12 months. India has improved its ranking from 142 to 63 in World Bank's ease of doing business. We have improved our ranking in Innovation Index. And recently, in the recent budget 2022-23, we have sent out a lot of positive signals to foreign private and institutional investors. Deep reforms like PM Gati Shakti, it's a national master plan for multimodal connectivity, which is essentially a digital platform for bringing 16 ministries for integrated planning and coordination implementation of infrastructure. The budget also recognized potential in sunrise sectors as artificial intelligence, geospatial systems, drones, semiconductors, space economy, genomics, pharma, green energy, and clean mobility systems. Another area, a great area of which requires investment and in which India has shown great development is renewable energy. The total installed renewable energy capacity of India has crossed 100 gigawatt mark. We are on track to achieve the targets set for 2022. We have already enhanced our ambitions to install 450 gigawatt of renewable energy capacity by 2030. We have taken several initiatives for increased adoption and use of electric vehicles. On Startup India front, as mentioned by Dilnoji, India has emerged as the third largest ecosystem for startups globally. Unicorn are becoming the identity of New India. The numbers of unicorn that from India has now risen to 88. In 2021 alone, 44 startups achieved unicorn status in India, and the first startup of 2021 has a Canadian connection. Digi Insurance, which is being funded by Fairfax, was the first unicorn in 2021. We have been meeting the bigger investments is definitely being done by the pension funds. In last 5 to 6 years, the investment from pension funds have increased from $5 billion to approximately $60 billion currently. We had this wonderful meeting with Brookfield and OTTP yesterday. We have always in touch with them, and we have always tried to address the concerns raised by these investors over a period of time, the policy decisions, and we work very closely with these investors. So this was a close background. I'm sure Rajat will give a much comprehensive and concrete opportunities where the investors can invest in India. With these words, I like to conclude here, and I would like to invite all of you to invest in India, to have business in India, to keep the connection with India. Consulate, on our part, we are here to support in any which way possible, and will continue to work with all of you. Thank you. Namaskar.
Thank you, Consul General, for your insights. Friends, it is time now for Rajat Yadav of Invest India to make his presentation. Mr. Yadav is a finance professional. He advises retail and e-commerce firms on their market entry strategy and on regulatory requirements. He has a keen interest in D2C space, social impact investing, and risk consulting. Mr. Yadav will be highlighting investment opportunities in especially in food processing, pharmaceuticals, renewable energy, tourism, and hospitality. Over to you, Mr. Yadav. I have made you the co-host so that you can present your slides.
All right, Mr. Parekh, thank you for the introduction. I hope I'm audible and I hope my screen is visible to all.
Yes.
Can you see my?
Yes, it is.
Yep.
Thank you.
All right, great. Thank you again for the introduction. Good morning to all. Good morning to Mr. Ripudaman Dhillon, Honorable Consul General Ms. Apurva Srivastava, and to esteemed members of the Indo-Canada Chamber of Commerce. My name is Rajat, and I'm part of the Canada desk here at Invest India, which is India's investment promotion agency. The agenda of my presentation today is to kind of piggyback on whatever the other esteemed panelists have already spoken of and elucidated on from an India's opportunity perspective, but also to try to encapsulate investment opportunities for individuals looking to invest in India. And I'll be covering certain rules, regulations, and regulatory ecosystem, and all obviously trying to give an overview of the macroeconomic indicators that are relevant for investors looking to invest in India. As to where the India opportunity goes, India is one of the fastest growing G20 economies in the world, with its global GDP rank moving from 9th in 2010 to almost 5th in 2021. And when it comes to larger demographic indicators, indicators of digital parameters, we have the second largest number of internet users in India with over 750 million, which is quite a good figure to begin with. And we are ranked second in the global retail index published by A.T. Kearney, which essentially assesses the ease of doing business and ease of entry into a certain country. So we are placed quite well there. As the Honorable Consul General already mentioned, we are the third largest in startup ecosystem in India. We have more than 63,000 startups that have been recognized by the Department for Promotion of Industry and Internal Trade. And these have been recognized over 633 districts in India. We are the third largest economy in PPP terms, having a GDP of nearly $8 trillion in purchasing power parity. Further on, when we talk about India, or when we talk about India in perspective to align it with the ambitions and interest of foreign investors, we must look at the growth potential of India. An interesting way to kind of understand this is to look at the GDP of India over the couple of years. For instance, India's first $1 trillion GDP came over a period of 63 years from independence till 2010. And the second trillion came in just 7 years between 2010 to 2017, followed by the third trillion, which came in just 3 years from 2017 to 2020. And we hope to kind of keep adding to those figures and reach a figure of nearly 8 to 9 trillion by the end of this decade. In the wake of the pandemic, it's also important. It is very prudent to evaluate the resilience of the economy before making an investment decision. In India's case, India has been maintaining pace and showcasing growth. India became one of the fastest growing countries, as mentioned before. It grew at a rate of nearly 9.2%, nearly 9.2% in 2021-22, and is slated to kind of further rise up by another 6.7% in the coming fiscal year. Despite the severe second wave that we saw, India's GDP in April-June Q1 of financial year 21-22 expanded on a 20.1% year-on-year rate. And this has been in tandem with increasing merchandise exports from India, which were nearly 33.14 billion in August 2021, an increase of nearly 45.17% on a year-to-year basis. Apart from all of this, obviously, we need to kind of also look at a few other parameters. I've already mentioned a few macroeconomic indicators. So one interesting way to kind of evaluate these is to look at India in a minute. These figures that you see on the screen here encapsulate in brief to what the India opportunity really looks like, driven by our growth rate, driven by our population, driven by our increasing incomes. India has adds nearly $5 million worth of GDP every minute. We add nearly 73,000 in FDI every minute. We also have 1.3 million digital payments, 1.3 million of USD in digital payments being facilitated in the same period. To further elucidate on beyond the macroeconomic parameters, there is also need to understand that this growth is driven not only by our demographics, but also through the ardent efforts of the Government of India. As you may already be aware, from a manufacturing perspective, the Government of India announced a few production-linked incentive schemes across 13 sectors and eventually 14 sectors with an outlay of nearly $27 billion. The idea of the PLI schemes was to enable manufacturing in India, also give opportunities for a lot of companies looking to collaborate or source with companies in India to come and be a part of the India growth story. For instance, we have seen PLIs being notified for active pharmaceutical ingredients, drone components, specialty steel, textile production, within textile, essentially man-made fiber, advanced chemistry cell, etc. I'll not get into details or nitty-gritties of each of one of them, but this is essentially a significant opportunity for larger investors. But this also entails an opportunity for a lot of other investors who are looking to source from India. Further to my presentation here, now this is where I want to focus on the investment opportunities for individuals. When we talk about foreign investments in India, we regularly look at various sort of foreign direct investment route for investors. Within the foreign direct investment routes, we have something called the automatic investment government approval system. Sometimes there is a hybrid setup wherein certain sectors invite automatic investments up to a certain threshold in terms of percentage of FDI drawn. And beyond that, it converts into a government approval route. For a few of the sectors that I believe are under focus today, namely pharmaceuticals, food processing, tourism, and renewable energy, I'll just kind of briefly tell you about the thresholds relevant there. For instance, under pharmaceuticals, 100% automatic investments is allowed for greenfield investment. There are certain caveats in brownfield investments for pharmaceuticals. For food processing, again, 100% automatic investments. When it comes to food product retail trade, there's a 100% government approval route. Again, the threshold for both is 100%. For tourism, we have 100% automatic investment for both tourism and tourism construction, followed by renewable energy, which is again in a global economy where sustainability is key. There's 100% automatic investment in generation and distribution of renewable energy. Below, you see a list of sectors which are essentially your FDI in certain sectors, which is essentially prohibited right now. This is either due to the sensitive nature of those sectors or due to the strategic relevance of those sectors. There are certain, but there are namely a few of them. But from a larger perspective, FDI is pretty much open in majority of the sectors in India, with the thresholds rising every year to nearly 100% in automatic investment law. As we, here we look at the types of non-resident and the fixed deposit accounts that one can maintain in India. Essentially, when, as I will eventually cover, the only type of investment isn't exactly foreign direct investment, and more relevant opportunities exist for foreign portfolio investments and other institutional investors. And from investment perspective, in fixed deposits, there are certain types of accounts that many NRIs or OCIs can maintain in India to either store their foreign earnings and earn interest in those, or also invest in investable opportunities in India and maintain that steady stream of income and maintain those accounts in India. One of the first ones that you see at the table here is NRE, which is the non-resident external account. Now, the account here allows an NRI to transfer or store his or her foreign earnings into India. And the deposits that you maintain here in INR form are essentially tax-free and fully repatriable. Repatriable as in you can just remit the money without there being any sort of restriction, and you can remit the entirety of the amount from India back to your country of residence. We also have non-resident ordinary accounts. These are bank accounts that you can maintain for income earned in India. Such incomes can be your rent, dividend, pension, interest, etc. However, the interest earned on such deposits are certainly taxable and they are non-repatriable. As I will eventually cover, why exactly what is the relevance of these NRO accounts and how do they fit into the larger scheme of things from an investment perspective, you'll have more visibility into why even a non-repatriable one is an ideal avenue. Third type that we cover here are foreign currency non-resident bank accounts. Now, these are essentially your term deposits, short-term term deposits, wherein you invest money for a certain stipulated time period and can be held in foreign currency. Again, from an interest taxability perspective, these are tax-free and fully repatriable. Essentially, you can withdraw the money without any restriction in terms of the principal amount. This is broadly, when I cover all of this is to kind of also showcase that in the entire Indian ecosystem, there's been significant interest from the NRI OCI community, and to kind of showcase that, we also have this graph at the bottom, which kind of essentially showcases to you that there's been significant amount of money that's been routed into India by the non-resident Indians, overseas citizens of India. As of March 2021, nearly 141 billion were outstanding in NRI deposits in India via all these above stated accounts. Another aspect, after talking about the types of accounts that are maintained by an NRI, it is important to kind of note the types of investment channels available to foreign investors. Like I earlier mentioned, you have the foreign direct investment channel with its own certain stipulations in terms of the type of sectors you can really invest money into. And from a broad categorization perspective, these entail more than 10% of investments in any paid up capital equity of a listed firm, and also the unlisted companies that exist. And from a foreign direct investments, of course, the money here being invested is into capital instruments, which include your equity shares, debentures, preference shares, or share warrants. But another type of investment that people look at are foreign portfolio investments. Now, foreign portfolio investments, these essentially include your broad-based regulated funds, such as mutual funds, investment trusts, insurance companies at thresholds of less than 10% of paid up capital in our listed firm. Further, such investments are subject to certain regulations that I'll again speak about to kind of give you an overview to how exactly they are relevant and how exactly these are regulated in India. The third type of investment that might be of significant interest to all of you is the foreign venture capital investments. Now, the foreign venture capital investments here that I talk about are investments made by an NRI or foreign investors in venture capital undertakings or venture capital funds. These are regulated by the Security Exchange Board of India. Now, what do I mean by venture capital undertaking or venture capital funds? The venture capital undertakings are your newly private companies which are new in the market and have to adhere to certain criteria as adjudicated by SEBI, and are essentially your new opportunities for you to invest into. From a venture capital fund are essentially pool of funds in India which further invest into these venture capital undertakings that I just mentioned about. So by and large, from a regulatory perspective, these are guided or adjudicated upon by SEBI rules, the foreign exchange management, debt instruments, and non-debt instruments. And there's certain relaxations in terms of the lock-in periods and remittances for all these equity and debt instruments that I further will be speaking on here. Like I mentioned, again, from a venture capital perspective and also from a larger foreign exchange perspective for investors looking to invest in India, there are certain rules and regulations that are very relevant, especially from whether you can repatriate your money or you can't. The Foreign Exchange Management Act of Non-Debt Instruments rules of 2019 were meant to replace the Foreign Exchange Management Transfer and Issue of Security regulations and foreign management acquisition and transfer of immovable property of 2018. And these essentially replace certain rules and regulations to come out with two broad parameters to highlight how exactly foreign investors can look at investing in India. One is, as you can see on the screen, is on a repatriation basis. When an NRI or an OCI wants to repatriate or move the invested principal interest back outside, these are again adjudicated upon by the foreign exchange management rules. And this is where, as I mentioned earlier, your NRE, NRO accounts become relevant. If you're doing it on a repatriation basis, your NRE account is the one that you use. If you're doing it on a non-repatriation basis, your NRO, non-resident extraordinary accounts, are more pertinent when channeling investments on a non-repat basis. Another important distinction that I'd like to bring into perspective so that it isn't limited to technical jargon is that non-repatriation bases have been further amended to allow any NRI or OCI who's making an investment into India on a non-repat basis to be at par with domestic investments, which essentially means if you're not repatriating your money back into your country of residence and holding it in India, your investments into the country are held to be are deemed to be domestic investments. And from an FDI perspective, also, there's no sectoral cap that you would have to adhere to. Further, I look at the foreign exchange management non-debt instruments and the types of investable opportunities that exist. These essentially entail on a non-repat basis. For instance, here again, from an equity perspective, NRIs can invest in a company on a repatriable basis up to 5% of the paid up capital value of the shares of a listed firm through a recognized stock exchange in India. Further, there's a certain caveat, of course. The aggregate holding by NRIs, OCI in that particular firm can be up to 10%. However, if a company then passes on a special resolution, this can be increased up to 24%, but the general threshold otherwise is 10% on an aggregate basis for NRIs, OCIs. Moving on to mutual funds, when it comes to equity mutual fund, there are certainly no limits. But broadly, the NRIs are allowed to purchase units of mutual funds without restrictions, irrespective of the type of mutual fund. From a taxation perspective, however, the transfer or redemption of units of equity-oriented mutual funds held for a period of 12 months are classified as long-term capital gains and are subject to a tax of 10%, while those that are held up to 12 months are classified as short-term capital gains and are taxable at a high rate of 15%. In case of debt-oriented mutual funds, the period, however, shifts. It's a little different, where the holding period has to be more than 36% for it to be classified as a long-term capital gain. And those gains are then taxable at 20%, while those for lesser are taxable at slab rates again, as per the income that you accrue in India. NRIs can also invest in the national pension scheme. They can invest between the age of 18 to 20, and the source of fund for the same has to be through your NRE, NRO account that I mentioned earlier. Important distinctions can be made for non-repatriation basis as well. This is again eligible. The eligible party here are both NRIs and OCIs. There's no major distinction in terms of non-repat, except for the fact that here there's no, think of it as one where traditional restrictions don't apply, because on a non-repat basis, your investments are deemed to be at par with domestic investments. Of course, there might be certain caveats in the type of investments that you make, but otherwise at par with domestic investments. And the only type of prohibited company is that prohibited investment routes are your Nidhi company, plantation, agriculture, real estate business, which again, I'll come back to later when I talk about immovable property. Broadly, again, and I'll try to keep it as brief as possible to kind of just give you a holistic overview of what I'm really trying to tell you about here. For a foreign exchange management debt instrument rule perspective, this specific rule may also be looked upon from the facet of repatriation or non-repatriation basis. The repatriable basis, investors have the option of investing in various securities, such as government securities, PSU bonds, debt, mutual funds, NPS, etc. One notable option is the infra debt fund, which are investment vehicles which can be sponsored by commercial banks and NBFCs in India, in which domestic and also institutional investors, especially insurance or pension funds, can invest through units and bonds issued by those IDFs. Now, IDFs would essentially act as vehicles for refinancing existing debt of these infrastructure companies, thereby creating fresh headroom for banks to lend to fresh infrastructure projects. On a non-repatriable basis, it is similar to what is allowed under repatriable basis. Addition to that are chit funds, funds which are where an individual can contribute and money is allocated to a beneficiary based on an auction. I'll, however, omit the nitty-gritties because of just to give you just a broad picture. When we talk about recent reforms undertaken by the government, specifically with regard to enticing investments from foreign investors, foreign institutional investors, individual retail investors, there are a couple of things that one must note. For the past couple of years, especially since 2018, a lot of reforms have taken place which are relevant for NRIs OCIs. For instance, in Feb 2018, the government enabled the provision for NRIs to continue their public provident funds as against the older provision where the PPF would be deemed to be closed once a person became an NRI. So that's been now allowed to continue. Another example is the one-person company. Till now, only a resident Indian who stayed in the country for over 182 days in the previous calendar year was allowed to set up an OPC. Now, the budget has proposed a relaxation in these provisions, reducing the residency limit for an Indian citizen to set up an OPC from 182 days to 120 days and allow NRIs to incorporate OPCs in India. There are certain double taxation avoidance agreement timing mismanagement also, when the government had promised to reform the elimination of double taxation of retirement funds. When they returned to India after retirement, a lot of NRIs have forced to again pay tax on their post-tax income earned in foreign lands. Now, in many cases, they are not able to claim credit for the tax they paid overseas due to mismatch in taxation period. The Honorable Finance Minister had promised to notify rules which will remove the anomaly of double taxation. And in order to address the mismatch of the taxation of income from the notified overseas retirement fund, the government has proposed a new section 89A to the Income Tax Act. Beyond this is one area that I would like to broadly cover on, because taxation is certainly a very important perspective. And under the double tax avoidance agreements, NRIs don't really have to pay tax twice on the following types of incomes, which are essentially services provided in India, salary received in India, house property, etc., etc. From a dividend perspective, when we speak about dividends, these can further be bracketed into two categories. Tax of less than 15% is applicable when controlling interest is more than 10%, and a cap of 25% is applicable for all other types of investments. After the abolition of the dividend distribution tax, the present tax rate as identified above is required to be withheld by the company paying dividends, especially in case of non-residents. However, the non-residents can take credit for tax withheld by the Indian company that was paying the dividends, subject to the provisions of the double tax avoidance agreement. Essentially, the tax payable on profits, income, or gains arising from India shall be deducted from Canadian tax payable in respect of the said profits, incomes, or gains. And that is essentially the gist of the DTA. This is the last tranche of my presentation. I'll just run you through a few of the investable opportunities. especially in terms of instruments that are available. Here we look at fixed deposits, equities, REITs, mutual funds, immovables, property, and a brief on startups as well. Mutual fund and direct equity. I mean, while I've covered certain aspects of it, and they are covered within the ambit of the NRE NRO account and how exactly they are relevant and what are the rules and regulations relevant when making investments. Broadly, from mutual funds, you can make investments into these mutual funds via your NRE NRO accounts, and they are based and obviously a disclosure when you are disclosure has to be made whether you're doing it on a repat basis or not. Investments. With regard to the taxation of mutual funds, again, there are certain parameters of LTCG, STCG, which are mentioned for your reference on the right. And the same, the differential here is LTCG for equity-oriented funds are 10%, while for STCG, the short-term capital gains are taxed at 15% for funds that are positions that are held for less than 12 months. Similarly, for equities, the LTCG is 10% for listed share, and STCG is 15% for your listed shares again. Moving on, immovable property. Now, here we look at certain aspects of immovable property. One is purchase, transfer, and repatriation of options from sale of the immovable property. When NRIs are purchasing immovable property, NRIs can purchase both residential and commercial properties, but are not allowed to buy agricultural land, farms, or plantation. However, this rule is not applicable if a person gets ownership of agricultural land through inheritance or as a gift. This purchase here must be financed by your from money in your non-resident accounts, the NRE and NRO accounts that I mentioned earlier. However, these cannot be financed by a traveler's check or a foreign currency note, which are not permitted. By way of gift, one can certainly avail of these options, and similar options are relevant for inheritance claims as well. In fact, for inheritance, there's no limit on the number of property that can be acquired or held by NRIs or OCIs. And but yeah, I mean, there are certain caveats which again are I'm not going to get into, but broadly this is holistically the relevant section. Transfer of property is also allowed except for agriculture plantation properties, and repatriation of sale proceeds here, provided that the money is held through the FCNR or the NRE account and the compliance has been and you are compliant with the foreign exchange management rules, you can repatriate money. And please note, I said FCNR and NRE account and not NRO account, because going back, NRO accounts are not ones that you invest through on a repatriation basis. You cannot really repatriate that money. For residential property, the sale shall be allowed up to max 2 properties. And there are certain other caveats, there are certain type of other restrictions also that apply. But holistically, these are the key considerations when making investment in movable property. Moving on, bonds are your debt instruments. When we talk about bonds, essentially, there's certain mode of investments that are applicable for NRIs and OCIs. They'll need to transfer the desired amount to their NRE, NRO, FCNR account. And once this amount is deposited, the Indian bank can purchase that fixed instrument for them on their behalf. The interest from these securities will come directly to the relevant account. Within these types of securities that we're talking about, you can buy government securities where an NRI has to submit a certain application through a designated authorized dealer bank branch. And the bank so chosen is then required to apply to the Reserve Bank of India or any other institution notified for dealing the government security before closing in the bank hours. Now, the idea also is that an NRI can participate in the auction in the competitive bidding category through primary dealer authorized bank accounts for such securities. You also have certain caveats in terms of taxation associated with it, which will, all these things essentially tie into your additional, your broadly the type of instrument you're investing in, whether you're doing it on a repat basis or non-repat basis, and of course the investment horizon. Like I mentioned, the STCG and the LTCG for each type of instrument kind of varies. So I think that is something one needs to be keep in mind. Beyond this, I'd like to talk about REITs and InvITs, because this is, I think, one area that is coming up, and I think based on policies reform that have taken place in the recent years, this is something that has caught on. And by the way, I'm just 2 slides away from completing my presentation in case it has gone pretty much has overshot. So your REITs are essentially special trusts formed in 2014, which are regulated to serve as collateral investment vehicles intending to invest the bulk of its money in real estate. Now, InvITs, on the other hand, are infrastructure investment trust, which is a mechanism that enables developers of infrastructure assets to monetize their assets by pooling projects under a single entity. And they work like mutual funds and are designed to pool small sums of money from a number of investors to invest in portfolio of infrastructure assets. A couple of REITs and InvITs have been made available in India. Your REITs, list of REITs include Brookfield India REIT, Embassy Office Park REIT, and Mindspace Business Park REITs. These are again, invested further into commercial properties and essentially maintain that cash flow emanating from that. A few of the InvITs are India Grid Trust, India Trust, Infrastructure Trust, India Highway Concessions, etc., etc. These are broadly your investable opportunities from an infrastructure perspective, if you want to get a taste of it. There's certain, obviously, there are certain thresholds in terms of investable amount that can be made, and the allotment value, which you can see on the screens here. With REIT, the allotment value is more than 50,000 rupees, while the allotment value here has to be more than 0.1 million. Coming to the conclusion of my presentation here is the investing in startups. Now, we have something called an alternate investment fund, which is a privately pooled investment vehicle which collects funds from investors, whether foreign, Indian, in accordance with a defined investment policy for benefit of the investors. There are certain category types, where in category 1 are your closed-ended funds, which include your venture capital funds, infra funds that I spoke about earlier. Angel funds are a further subcategory of venture capital fund, which again, as I mentioned earlier, you have venture capital undertaking and venture capital funds, and your angel funds are a subcategory of the venture capital fund, which are now eligible to invest in startups. And this amendment was brought about by the regulations in 19F and allow a person to kind of invest in the angel funds as well. I'm not going to bog you down into a lot of nitty-gritties that go with it, but with that, I would just like to close my presentation and would actually like to thank the organizers and also invite any queries and concerns you might have. Additionally, I've left the email ID of the team here on the screens in case you have any specific questions that you'd like for us to address later on eventually and come back to you with refined answers on how exactly you can invest. I'm more than happy to take your questions at canada@investindia.org.in, or of course, you can route your queries via the esteemed organizers at ICCC. Thank you again.
Thank you, Mr. Yadav, for sharing your knowledge and sharing such an insightful information. It is, by looking at this, I'm sure, we cannot just look back now. Definitely, we have to look forward and invest in India big time. So now for the last segment of the program, the panel discussion by experts. We have with us BK Sethi, a veteran of the food and beverage sector. He is also on the ICC's advisory board and has keen interest in the startup ecosystem, both in Canada and India. With him is Hemant Shah, who is from Winnipeg, but at present is in Mumbai, India. Hemant Bhai is a veteran operator in the India economic door, having started trading nearly 4 decades ago in Winnipeg. And finally, our third panelist is Tribhuvan Anand, a management consultant with global experience and a wide network of contacts in high places. I would prefer each of the panelists take 3 minutes to speak about the Indian scenario as they see it from an investment perspective. Thereafter, I will ask them a couple of questions. So let us begin with Tribhuvan Anand. I would like you to unmute yourself, please. Thank you.
Can you hear me now?
Yes, we can. Thank you.
First of all, let me begin thanking Mr. Ripu Damandillo for his wonderful insight and the work which is being done by the ICCC here in Canada. Of course, the insight provided by the Consul General, she was very methodical in her approach and information, which has great significance in deciding as to who is going to invest eventually. And of course, lastly, Rajat has done a commendable job in putting all the facts and figures together. Yes, this is a place, this is a time when India can be projected. I would rather say today's India is a blend of ancient, traditional, and technological competence. And there cannot be a better time than this to invest in a place like India. Firstly, when I say in our sculptures and in our ancient business philosophies, they say Samay, Sthan or Karan. So Sthan is definitely India. Samay is very good because there is a political willingness, and Karan is that there are opportunities for every Indian. There are a lot of people who would prefer to invest in India for the commercial reasons, but there are thousands of us who would invest in India for emotional reasons. Reason being that we have traveled a success path so far. This is the time to give back, and I'm sure there are thousands of or multi-thousand people here in Canada who are willing to work with the people who would lead this process of bringing back the technology and the revenue to the system. Coming back to what Rajat has already mentioned, there are a number of, but I would rather go back to 4 large platforms which started with export or trading out of India. I would say textile, right from Dhaka cotton days to Pashmina in North to polyester in West. There was a polyester revolution in West, more particularly Maharashtra and Gujarat, and silk from South. So we have a history of running into thousands of years, which probably take us to a textile which have been imported or exported out of India. And then we also have a very significant, to the present context, air and water pollution control. Swachh India Abhiyan and Make in India, completely handled by a very close friend of mine, Amitabh Kant. And of course, as Rajat mentioned, Gati Shakti, and definitely there's another area of large exports from tribal affairs, completely handled by Praveen Krishna, a very good friend. IT has always been a very significant bridge between people from India and anywhere else in the world. I would rather put India on R&D map now in information technology. We have gone past that the process or the era of following people. Now we should be leaders. This is a time when Indian diaspora, more particularly, in Canada or elsewhere in the world should decide to bring research and development into information technology to its hub in India and start working from there and then start leading the world.
Thank you so
Of
much,
course.
Tribhuvanji. Thank you. I would as we have a limited time, so I will be taking
Thank
you
you
more
very
time
much for
by asking more
giving me
questions.
this opportunity. We will continue this discussion on another
Please.
platform another day.
Absolutely,
Thank you.
absolutely. I would like to now invite Mr. B.K. Sethi, please. Mr. Sethi.
Good morning. It's a pleasure and to speak to you, and I want to thank you, Rajaji, Apurvaji, and Ripudaman, giving us the background. I will only concentrate on the food and beverage sector, which is basically has a lot more opportunities for our NRI and OCI Indo-Canadians to invest in the industry. India is the largest producer of fruit and vegetable products. Our export of fruit and vegetables has experienced 26.5% increase over the last year in 2021, and processed food has experienced an increase of 40%. That is during the pandemic in 2021. India also produces the largest producer of pulses, groundnuts, cereals, in snacks and sauces, and RTU, ready-to-eat products, are coming up too. So there are opportunities in the food section for investment and growing that market, because we have the raw material and we have the know-how, and I think if we can process those products as a value-added products, we can basically invest in that segment to make bigger gains in that. The processed food industry has to look into also opportunities are in value-added products like nuts. Why do we sell raw cashews? Why can't we just process them? Turmeric. Why do we sell turmeric? Turmeric is the largest. We are the second largest in the world. And turmeric is used in medicinal purposes as well as ingredients. So there are opportunities in ready-to-eat products. Right now, consumers look, even in India, looking for convenience. So we want to develop the opportunity to invest in ready-to-use products, and also sauces and snacks is growing category. It's about 12% increase over every year, and it is not being covered properly, and there is an opportunity in investing in that segment. Fish and shrimp segment is also growing, and we are the second largest producer of shrimps in our fishery and seafood product. Shrimps is about 75% of our production, and 50% of that goes to US. So there is an opportunity of developing that fish product, and also we can have a value added like a frozen packaged product ready to sell. Food service is another segment which is growing at about 12% and is currently about 13 billion worth market. Now, people are eating out. All the major international food service operators are in India. So there is an opportunity to use that as a distribution service or warehousing or supplies or a new product development. That brings me to cold storage. Like the biggest problem we have in our industry is the warehousing and logistics, because 30%, 25 to 30% of our produce and fruits go waste because of our lack of warehousing, cold storage, as well as the transportation to the source. So I think there are very, very good opportunities. We have projects by Investment India and other sources. I think this is another opportunity. Wine and liquor. Wine will produce about $83 million worth, but that is an untapped market. Nobody has actually looked into that market. So there are opportunities for investors to go into food segment and grow. So we can
Thank you.
basically invest into these segments.
Thank you so much, Mr. Sethi.
Thank you very much.
Thank you. I would like to now invite Mr. Hemant Bhai. You have to unmute yourself, please. Yeah, I think you have unmuted now. Yeah.
नमस्कार। आप सबकी तरह मातृभूमि तो मेरी भारत ही है, लेकिन मेरे लिए कर्म भूमि विनिपेग कनाडा बनी। More than 48 years in Winnipeg, and I know down east people talk about Winnipeg is a winter peg, but I must say that our hands are cold but heart is warm. That's in Winnipeg. Distinguished guest, Her Excellency Consul General Dilon Saab, Mr. Yadav, everybody gave an excellent and amazing presentation. But with my experience with Canada-India trade for last 48 years, I'm going to touch on three sectors. First is the aviation. Aviation is a corporate aviation I'm talking about, the corporate jets. There is not much facilities in India for a corporate jets, like MRO facilities. Till today, aircrafts are going for major engine overhauls and everything in abroad, mostly in Singapore, Europe. So aviation is the very good sector in India. Second sector is agro-food sector. Sethi Saab has mentioned, and I will just add into it. Mr. Shetty has given us an overview on agro-food, and he's very correct. Agro-food industry is an amazing industry in India. Everybody wants ready-to-serve food. And I'll just give you a small example. Yesterday, somebody came to see me in Mumbai, and it's a mother and son operation. And they've developed the gourmet popcorn in this pandemic. Because in pandemic, lots of people were watching at home the movies or serials, and they came up with that idea, and it has become a very amazing, like they were selling 50, now they are selling every day 250 gourmet popcorn. So that's the market. That's a market in India. And we as a NRI or OCI, we should look at it in agro-food industry, ready to serve food. And my advice will be, or my suggestion will be, not to go in a metro cities. Like, everybody wants to be in Bombay or Pune, but go near Pune, Satara, Sangli, Solapur, Kolhapur. There's a big potential market. Same thing in Gujarat. Everybody is going to go to Baroda, Surat, Ahmedabad. But why not we talk about Kutch? Kutch has today, after the earthquake and everything, Kutch has done very well. It has expanded. Same thing, you go to Uttar Pradesh, everybody want to go to Lucknow, Kanpur, but try and go to Jaunpur or other small cities, So you get a bigger market, which is untapped market, and you can get that market share, because everybody is going to the metro cities, but nobody is going to the rural area, So third sector I was talking about, the mining sector. Mining is became a privatized now. There is a lots of people are operating like Vedanta and few other companies. They are owning mining sectors, but there is an opportunity in a mining sector. And then mining sector related equipment, like Canada, we are the leader in mining, and we are leader in agro-food. We are leader in aviation. So why not we look at these three sectors? And Bhavik Bhai, if I have a time for a 1 minute or
No, thank you so much, Hemant Bhai. We have
thank you.
already covered the 3 minutes, but now it is a time for questions actually. So please be online, and I'm going to add all three of you in the same window. So I can ask you all three same question, and then you can just reply with one or two liner if you can. So the question for all three of you is the very first question. What we have is, what are the biggest hurdles to investing in India? So maybe we can start with Hemant Bhai, as you were talking before. So you can continue.
I personally think, what I have done the investment in India, I never found any big hurdle. You have to, this is what always I tell the people, when you leave Toronto, Canada, leave your Canadian hat back and you wear the Indian hat, then you will be more successful, When we go, I land in Bombay, I speak in Marathi, Kasa kai martat, that's it, your work is done. So I have not personally found any hurdles.
Great answer. Thank you so much. Tribhuvanji, please.
Yes, of course. The policymakers make wonderful policies in India. They've been making wonderful policies in the past. But when you translate those policies into actions and operations, there had been a trust deficit. And that resulted into large-scale corruption in India. People were unable to control because of the system and the pattern. But I guess the political willingness and bureaucratic control has emerged today as a wonderful blend. And I would say that willingness on part of the political system and the urge to deliver by the bureaucracy and the operation system is come in complete circle. And I think we are very proud of this moment that as of today, you can walk into any large decision maker or effective decision maker and get your answers.
That's
so
great.
That is what my take is.
Thank you. Mr. Sethi, please.
Yeah, I think the biggest is the perception. The India has changed a lot from, I left 55 years ago, but India has changed a lot. We have to change our perception. We think, oh, that is not possible. It is corruption. No, it is not. If you go into there, you will see that things have smoothened so much now. People are educated. People will talk your language. I think that we have to clear that perception and take that fear out of that doing business in India is too much problem. There is so much bottleneck, too much that it is not. I don't think. Let's educate people who want to invest that India is a place to grow and it has an opportunities. It's not the same India, but just when you left 50 years ago.
Great. Thank you. Thank you so much, Mr. Sethi. Now, the second question is, in your long experience of operating in the Canada, India Investment and Trade Corridor, what has been your experience with the Indian government agencies? Going purely by statistical information, they seem to be ineffective in promoting trade. I want to start with Tribhuvanji this time.
As far as any expat or any Indian settled overseas is concerned, the biggest issue had generally been getting a visa back home. I think in the last few years, the consulate and the high commission or embassies, wherever they operate, have started taking it a little seriously. So there have been different windows for different people. You have a visa for businesses. There's a different window for tourism, for medical tourism, for other reasons. But I understand this shift has really given a lot of confidence to a business traveler to go to India. So at the first step, if I really have to say, the consulate services have improved tremendously. Kudos. Number two, when you go to India, there had been a tremendous pressure on logistics. How do you move from one place to another? How do you, the train services, the airlines, now most of things are online and they are very effective. So that's another area which has seen improvement in the past few years. But lastly, and more importantly, that people, investor or travelers, either way, they were very scared of the corruption.
That's really good. I want to actually address the one of the question of answer by Hemanji. But before Hemanji, I would like to have Mr. Sethiji speaking about this. Mr. Sethiji, please go ahead.
No, I think there's a lot of improvement in Indo-Canada or any other foreign dealings. We have experienced from the last 30 years when we did the business with India, a lot of improvement. People are understanding the concept of consumerism, concept of service, and everything has improved in India a lot. And there is a lot more improvement to be needed, a lot more education to be needed, and a lot more motivation has to be done with the Indian people, Indian suppliers or Indian traders or Indian exporters or Indian investors from here to there. I think we have to be a little bit more patient with the people there who are actually providing us the services. I think there is a lot of improvement and we are very much proud of it. Thank you.
That's great. Now, Mr. Hemanji, please. Mr. Hemanji, I would like you to continue answering the same question regarding the government inefficiency or there is ineffectiveness.
Well, I will say when I used to do a trade from Canada to India to our Bharat, it was 175% duty. I don't know how many people have seen that import license, Raj. So I've done the business in 77, started from Canada to India, and I can say India has changed drastically, amazingly changed. But the point, like you can understand, we in Canada, what is our population? India is 1 billion people. We are only 74 years old economy. It will take a chance. I'm not going to talk about any political thing, but the point, India is our motherland. Give it time, it's working, it's going on a right direction. And I personally think, again, I'm repeating, you want to do a business in India, leave your Canadian head back and go as Indian, you will be more successful. That's what there is no hurdle personally. I've worked with different high commission, different consul general. They always promoted India. They've done their best and they will do best. So I personally think, leave a Canadian head back and be Indian, you'll be more successful.
Thank you so much. Thank you, Hemanji. And one of the final question is, what changes would you like in investment and trade promotion policies to encourage investments in India from Canadian entrepreneur? Very good question, Mr. Sethiji, please.
Well, I think first of all, we have to understand that we have to clear our perception that no, this is not the right thing. There's a problem. Whenever I speak to some Canadians or the Indian who want to invest, bigger thing is, there's too much corruption. Or so many. That is not true. We have to clear that hurdle first. Secondly, I would like to say is that a little bit more education from the government side, investment India to promote India as the source and clear that perception that India is not as good as it was told. I think the education of the people and also a little bit more promotion, establishing India as the source of supplies or trading, and that it is safe and it is the second largest economy in the world and growing fastest than any other economy.
That's great. Hemanji, please.
I agree with Shetty, and what I will suggest, like Indo-Canadian Chamber and with the Government of India and the Department of Foreign Affairs, we should promote India more. And as he said, India is the place for the investment, and we have to change a little image. And I think that's all.
Great, thank you. And Tribhuvanji.
Well, I guess this is the time when there's a lot of introspection which needs to be done at the government level. Although a very close friend of mine is the governor of RBI. banking is one area where we need lots of improvement, because anything which we do between two countries, Canada, India, through the nationalized banks, we always hit roadblocks. That is something which need to be addressed, because this has to be done on a global level. Number two, double taxation avoidance treaty has to come in place effectively. We do not want, or no investor would want their investment to be done in a place and then end up paying taxes at the origin and the investor's location. Now, third is repatriation of the funds. I have really seen that there had been tremendous hurdles, bureaucratic issues, and unnecessarily questioning when it comes to repatriation of funds. I tell you something: when an investor goes to invest in a mutual fund or any place for that matter where he has gone to make an investment, the first thing he wants to understand and believe that tomorrow, if his mood changes or the demographic changes, or for that matter, the better opportunity found elsewhere, would he be able to repatriate his funds back? Is his money secured? Is his investment secured? This is a big question would be asked by investors. And I confront these things day in and out. And well, I would say the lack of confidence or the deficit in trust, sometime I'll have to cut a sorry face and see that I have to come back. We are still trying to modernize. You see, with every platform and education provided to banking people, but the mindset has not changed. That has to change. Otherwise, we are going to be having tremendous issues from investors, because banking is the first place and the last place where an investor has to experience and get their due respect.
That's great. Thank you so much. Yes, Seti, sorry, you want to add just one?
Yeah, I just want to add that Invest India is doing an excellent job, but what we need is a follow-up with the people who are interested. Once you throw them a brochure and then there is no follow-up for a year, that's not. So ICCC has the network, and I think we both or other associations can also help generate the interest, follow-up, and also answer questions. That is very, very important, because a person who wants to invest and you tell them the first time and don't follow up for a year, that he's gone somewhere else. So I think ICCC can help with all other business association can help Invest India and India itself. Thank you.
And last words by Hemanji, please.
I agree with Tribhuwanji, what he said about the banking. Banking has to be made easy. When NRIs or OCs are investing money, and the point, I agree, when we want to take the money back, there's lots of bureaucracy with the banking area. I'm not going to mention any bank, but I have seen they ask too many paperwork. When you brought the dollar money, repatriating same money, the manager sitting there, he's just questioning. It's like the bureaucracy that has to be changed.
That's great. Thank you so much, all three of you, Mr. Hemanji, Tribhuwanji, and Mr. Setiji. That this has been a excellent conversation, and I think I would love to keep going on and on, because I think a lot of experiences and insights are coming out of here. So, but with this, all good things must unfortunately come to an end, and that is true for everything.
Bhavik Bhai, thanks for opportunity.
Thank you.
Thank you, Mr. Parekh. Thank you very much.
Thank you.
No problem. And
thank you, Ripuji.
And just as we conclude our program, let's emphasize how important the program was for our chamber. We are delighted that we were able to have a focused program on Canada-India investment and trade collaboration initiative. The program has given our members and the Indo-Canadian community's entrepreneur a glimpse into where they can invest in India. Before we conclude, we as a chamber would like to acknowledge our guest this evening, Consul General Apoorva Srivastava ji, who took time out from her busy schedule and participated in the session. We also thank Rajat Yadav of Invest India for his power-packed and insightful presentation. As Ripudaman said, this is an unprecedented program for our chamber. It is first, and I assure you it won't be the last. I also acknowledge with deep gratitude the presence of our expert panelists, BK Sethi, Hemant Shahji, and Tribhuvan Anandji. Our chamber is able to serve its mandate because of the support we receive from our sponsors. Special thank you to Turkish Airline, our gold sponsor. Sincere gratitude to our bronze sponsor, SBI Canada Bank. We also appreciate the support we receive from our sector sponsors that include ICICI Bank Canada and GT20. Our media partners help us with our outreach by broadcasting our program on their channels. Weekly Voice and the Voice News Network are our long-standing partners, and we are deeply thankful to them for their continued support. We also acknowledge the support we have received from PTC Punjabi Canada and ATN. Our award sponsors include Sigma Group and Bromade Pharmaceuticals. We thank them for their continued support. I take this opportunity to thank the member of our audience who have found time to come participate in today's program. Thank you and have a good night and a good day. Thank you.
Thank you. Thanks, everyone. Stay safe
Thanks,
and
everyone.
blessed.
Thanks.
Thank you.
Bye.
Thanks, guys.
फोन मध्ये फोन अचे ना मारा